Good morning, everybody. I would like to welcome you to our presentation today, Women and Wealth. We are very fortunate to be able to bring this presentation to you ahead of International Women's Day. Today we're going to be joined by Jaime from Fidelity for this presentation. My name is Jackie Touchet. I am the wealth leader with Northern Savings Financial Services. And so, as always, we would like to acknowledge that Northern Savings is situated on the traditional unceded lands of the Haida Nation and the traditional territories of the Tsimshian Nation. We are committed to taking real action in our journey to reconciliation and have implemented the calls to action for business as outlined by the Truth and Reconciliation Commission. So, Jaime Ethier from Fidelity is the District Vice President. She has joined us previously on some presentations, so you might recognize her. And we work very closely with Jaime, and we appreciate all the support that she gives us in our business here. So I am going to pass our presentation over to Jaime, and she's going to take care of the Women in Wealth presentation today.
Wonderful. Thank you, Jackie, for that kind introduction. Yes, happy Women's Day, everyone. So let me just give me a moment here while I bring up the presentation on my screen and we will get going. We'll be talking about women, wealth, financial well-being, all that good stuff. Bear with me here.
I'm going to go off camera, so.
Okay. Sounds good. Can everybody, or maybe someone give me a thumbs up, or Jackie, just let me know if you can see my screen here for the presentation.
Yes, sure can.
Perfect. I see lots of thumbs up there in the audience. Love it. Love it. Okay. All right. So welcome, everyone. Again, my name is Jaime Ethier. I'm a district vice president at Fidelity Investments. What does that mean? Well, as Jackie pointed out, I help advisors across British Columbia, helping them in terms both of giving some market outlook as well as helping them sort through the tons of financial solutions that are out there. So helping advisors help their clients is the Coles Notes of what I do every day. And today we're going to be, again, talking about women and wealth. So without further ado, let's get started. So this is the disclosure. Don't try this at home, or do, maybe. Okay, so women, of course, we come from all walks of life, not just Canadian women. And so for the purposes of this presentation, we've compiled a whole bunch of research, both that Fidelity does, as well as externally, to talk about how women feel and think about money and some of the unique challenges that we face, and also how we do as investors. So just by way of recap, who is Fidelity? Well, we're actually the largest active asset manager in the world. We run about $6.6 trillion for investors across the globe. And we have a global research network in order to do that as well. So we have offices located across the globe. So we're truly a global company, as you can see here. Now, again, some of the research that I'm going to be citing, of course, we're going to be citing the Fidelity Retirement Research Report, which we conduct every year in Canada. So we interview 1,700 Canadians to get a sense of how they are feeling, again, financially, how prepared they are for retirement, how they're feeling in retirement, etc. But we're also going to look at some research from the US, of course, from the United Kingdom. So there's a lot of different sources that we are going to draw on today. Okay, and so what are the topics we're going to be covering? So in a nutshell, here's our agenda today. We won't spend long here, but we're going to be talking about how women are increasingly becoming financially independent, how we think about financial well-being, and finally, how women invest. So we're going to unpack all of this stuff today. So let's start with financial independence. So looking at, the spectrum of women across Canada, there's a ton of different, different compositions of households within Canada. Of course, there's families, there's couples, there's single mothers, of course, as well. So we're going to take all of this into account. But one thing to note is that we have far more women-led households today than ever before. Let's talk about some of the things that are changing. So one interesting stat, which I love, is that more and more Canadian women have university degrees than ever before. In fact, you can see as of the end of 2023, there's more more women are graduating with university degrees versus men. So that's kind of a fun stat. So women are just increasingly empowering themselves and getting educated. And this has been the trend since 2010. And we can see that, again, not just on a broad level, but we can see it across different educational disciplines, right? So whether we're looking at humanities, leisure, we're seeing more and more women. Of course, there's a few places where you have more men, and that is in math, architecture, and engineering. But again, looking again across the broad spectrum of these different educational divides, I guess you could say, there's a lot more female representation, which is really cool to see. Women are also earning more and more as the years go on. So our financial earnings power is continuing to increase. So you can see here, income levels among the top 1% are rising steadily. And we have 4.3 million families where women are the majority or sole contributors to household income. That's another pretty cool stat to share. Okay, next we have more women in the workforce than ever before. So this is true in Canada. This is also true in the US. So more and more women are coming into the workplace. And again, that is just a great thing to see. We're at record levels of female labor participation rate in Canada and the US. And we would also note that diversity has significant advantages to the economy as well. So having, that different perspective, different cultural backgrounds can be really additive in terms of, how we think of business, how we think in the workforce. I would say that's a strength, right? Is having that diversity, not just having one way of looking at things. Okay, here is another cool stat, but if we're talking about the top 1% of income earners, it's still majority men, sad, but but women are closing that gap, right? And you can see that over time, that women now account for a quarter of the top 1% of income earners. And, I'll admit this stat is a little bit old. It's from 2018. So, oh my gosh, what is that? Almost 7 years ago now. But I think if you looked at this stat today, you would no doubt see that trend is continuing. So women are increasingly being represented on the business level, right? So you have more and more representation of women at the corporate level. And this is here we're looking at Canada. So this is the representation of women on the board of directors within Canadian companies. So you can see since 2016, we've had an increase, and you're seeing more women in those roles, particularly on publicly traded companies. So the public, what that really speaks to is that the public is really demanding this. But not just on the public side, not just on the private side, sorry, but looking at the public side as well. So women are increasingly being represented within Canadian government, right? So that's what this stat is showing here, that over time we're seeing more and more women participating in Parliament and in the cabinet. So another great stat to see. So I think suffice to say, for this section of the presentation, we can easily say that women are being more educated, they're becoming more empowered, and that's being reflected in the workforce, both on the public and the private side. So women are continually earning more money, and we're closing some of that wage gap with men. But shifting now to the second part of our talk today, we're going to talk about the different ways in which women think about financial well-being compared to men, right? Because we do think about finances differently. So let's get into that. So just a fun stat to start off with is that over the next 5 years, we're going to see more and more wealth controlled by women. So there's a significant shift in terms of money coming into the hands of women, and they're going to be able to control it and have a say, have more of a say, right? Now, part of that is obviously inheritances coming into play, but a part of that is also, again, that increasing that we're seeing in terms of the financial earnings power of women. And we are increasingly so this is the study done by our Fidelity retirement survey, but we're seeing more and more women, again, take control of their household financial decisions. So 59% of women surveyed are making those decisions now. So this is just going up as time goes on. And in particular, we're seeing this really exemplified in the younger generations as well. So we spoke earlier about the rise of, professional women, and millennial women in particular are a key part of this group. So more and more younger women are taking greater control of their household financial decisions. So maybe we should stop for a moment and just kind of unpack, well, what do we mean by financial decisions that are being taken care of by the women? So this is things like rent, education, taking care of loved ones. These are some of the financial responsibilities that we're talking about when we talk about those financial decisions. Now, women in particular really connect financial well-being to a sense of being, overall fulfilled and overall feeling secure, not just from a financial perspective, but from an emotional perspective as well. So women are more likely to feel happy when they have confidence and they are financially secure. So 65% of women surveyed said that they can't feel happy without a sense of financial security. If we compare that to men, it's a little bit less, it's about 60%. Single women in particular also tend to feel significantly less knowledgeable than men about how and where to invest. And we're going to get into this in particular when we, in the next section coming up here. We're going to get into the ways that men and women think differently about investing. Another thing to note here, women, they feel more pessimistic about the future. So women tend to worry a little bit more. Yes, that is maybe a bit of a stereotype, but we can see some of that backed in the data as well. Okay. So again, as I mentioned, that connection between finances and your overall well-being is more pronounced for women. So we looked at, when we did our Fidelity retirement report, we asked both men and women, looking out for the next 12 months, how do you think things are going to go, right? And overall, what we see is that women appear to be more concerned overall than men, right? That's not too surprising given some of the dynamics that have been in play over the last decade or so. We're, of course, seeing higher inflation in recent years, and higher cost of living as well. So women are much more likely to, be thinking about these things. And again, that ties into financial well-being. And in general, women feel less prepared for retirement than their male counterparts. And we look at this in a few different ways. So we look at this from a financial perspective, how do you feel about retirement? From an emotional perspective, physical and socially as well. So if we compare that to men, so again, men tend to feel better about these things than women do. And again, that is showing up in the data, right? So here's the delta between the two. So this is from our 2023 Fidelity Retirement Report. Okay, so now looking at our outlook on retirement, this is looking at over a calendar year period, how that has changed. But basically what we can summarize here is that over recent years, our outlook on retirement has gone down, right? So people are less likely over the last several years to feel positive about retirement. So it decreased in 2020 to an all-time low. And I think we can all remember what happened in 2020, right? The pandemic happened, and that really impacted people's confidence regarding retirement. So I don't have the 2024 numbers here, but I think you would expect the same trend in play. Men typically tend to feel a little bit better than women. And, given some of the dynamics that are at play right now with respect to Trump and tariffs and a lot of that uncertainty, I'm sure if you pulled the 2025 numbers, which of course we can't do because we're only 2 months into the year, but I'm sure those factors are definitely going to be weighing on investors' minds and how they feel about retirement. And I should note, this is pre-retirees, right? So these are people that we're surveying that not retired yet, right? But we're asking them, how do you feel about retirement? Now, I point this out because there are some unique challenges faced by women compared to men. And again, this all contributes to our overall well-being. But this is a little sneak peek or a little preview to my next slide. This is the oldest living person in Ontario, Helen Doan. She turned 113. Now this is, a little bit dated, but 113 on September 18th back in 2023. But what I'm trying to illustrate here is, again, one of the unique risks that women face compared to men in terms of finances is life expectancy, right? So women tend to live longer than men, right? Another reason why more and more women are controlling their finances as well, right? You outlive your spouse, right? You outlive your family. Some of the other challenges that women also face, again, that this all contributes to our sense of financial well-being, right? And then our overall well-being. So women also tend to face more work interruptions than men. What do we mean by work interruptions? Well, of course, we go on maternity leave. Women are also more likely to take time off to take care of other family members, right? That could be a young child. That could also be an aging parent, right? So this is a work interruption that men are just less likely to face. And that's also what leads to a wage gap between men and women. Women tend to take these leaves, maternity leave, especially when they're just gearing up in their career, right? Men, on the other hand, they take a lot less parental leave than women. They get that next promotion sooner. And so what that means ultimately in terms of your savings is that, women can sometimes earn less, right? Because of these work interruptions. Another challenge faced by women is that they feel less confident about their investing abilities, right? So again, these are some of the challenges that women face that are less impactful for our male counterparts. Further to the last slide here, so women are, again, more likely to delay investing because they are doing other things, paying down debts, making other purchases, and this is in contrast to men. So women will delay investing to work on other financial goals, right? So this is part of, I think this is part of expressing how women tend to worry a little bit more than men, right? So we can delay investing as a result. Okay, so that was how women think differently about finances and financial well-being. Now we're going to get into specifically investing, right? And some of these next slides kind of blend over into that last section that we just went over. But let's really get into here how women invest and how they invest differently, of course, than men. So women consider themselves to be less knowledgeable when it comes to investing, right? So men here are the dark blue, women are the light blue. And if you were to ask someone, how good are you at investing, or how comfortable do you feel about decisions and where you invest your money? And again, men are more likely to feel knowledgeable compared to women, right? Only 7% of women felt knowledgeable about their, very knowledgeable, I should say, about their investments. To take this a step further, most women, or not most women, but a larger proportion of women also don't know what their investment portfolio is made up of, right? So 31% of women asked said they didn't know, compared to only half that, so 16% of men. So women, I think the inference here, women tend to feel less confident about their investment decisions than men as well. So again, when we made this survey, so this is our 2023 Fidelity Investor Perception Survey. We interviewed people from the ages of 18 to 70. And again, we asked them, how do you feel? How confident do you feel about your investment decisions? Men are more likely to say that they're very confident or somewhat confident compared to women. So these concerns are also likely to disproportionately influence women to postpone their investment their investment plans, right? So we had a slide on this earlier, but there are things that, as I mentioned, there are holding women back versus men from retirement, and these are some of those points here, right? So women feel they haven't saved enough. There's the rising cost of living. They haven't planned enough for retirement, debt. You'll notice that the minority are actually, concerned about their performance of their investments. They're more focused on these more emotional issues, right? So remember how I mentioned some of these slides kind of tie into that last section as well. There's definite overlap, but all of this combined, again, there's many financial reasons that women feel less confident about their investments. Now, here's some good news. So women are more likely to partner with an advisor than men. 42% of women also said they were likely to stick to their advisor's plan. So let me unpack this slide a little bit here. So there's different ways in which you can work to invest your money, right? So you can self-direct, which means you're making your own decisions, right? So you're not talking to an advisor, but you are talking to an advisor, but you still want to make the final choice, right? So the minority of women in this case, only 18%, fall under that bucket of being what we call self-directed. Whereas 69% are what we would call validators, right? So they're partnering with an advisor. So women like to partner, like to work together with an advisor to come up with the solution together, right? And then a smaller fraction of women are what we call delegators, right? So they fully entrust their financial advisor to have their best interest and make decisions on their behalf. Now, there's nothing wrong with either of these. It's just highlighting here, again, that women really like to partner and have that collaborative effort with their advisor. Okay, So this slide here, we're talking about how women relying on mutual fund advisors the most are how they rely on advisors for advice, right? So whether it's with a mutual fund advisor, a full service broker, less women are likely to do it themselves compared to men. So men are more likely to go at their own way, so to speak, versus women who again tend to like to partner. Now again, some differences as to how men and women think about investing. So we asked how often do you check your investments to see how things are going, right? And you find that men are more likely to check on a regular basis. So 65% of men surveyed said that they are checking monthly or even more often than that. Women are more likely to check on an annual basis or even a quarterly basis. And I might interject here as well to say, I would really recommend, and I think your financial advisor, Jackie, would also recommend that you check your statements on a quarterly or even annual basis. And the reason being is that what can often happen is when you're checking on a daily or weekly or monthly basis, you're more likely to become emotional and make an emotional decision that could adversely affect your investment goals. Right. So checking more often doesn't mean that you're smarter, doesn't mean that you are more in tune with what's happening, right? It can actually lead you to, again, have an emotional reaction. Okay. Women also, when they think of investing, they tend to think of or follow a goals-based approach, right? So they don't tend to think in terms of those like the hard numbers, but they think of what am I trying to achieve here, right? So is it paying off debt, be it student loans, mortgage, etc.? Am I saving? Are my investments for, these big life events like buying a house or retirement, etc.? Women also tend to think more about things like having a family care fund, right? Like making sure you can take care of your loved ones, be it your parents or your children. And then women are also, when they think of that, when they use that goals-based approach, they're also thinking about those transitions that we talked about, right? Or those gaps in between when they might be working. Okay. So as the slide points out here, so women are more likely to leave or never engage with their financial advisors. So this is looking at a Canadian study here, but I think this speaks to how women feel less confident about discussing finances with their advisor. So as a result, they tend to maybe take the back seat in meetings, or when their spouse passes away, they're more likely to leave their financial advisor. But that doesn't mean that women don't value financial advice, because women do tend to value financial advice more so than men, right? So women want, again, to collaborate. They want to partner with an advisor. They want help in managing their money and managing through some of these big goals that they're trying to achieve. Okay. I think we already went through a version of this slide before, but this is showing what asset classes are in your portfolio. So again, speaking to what are you invested in, women are less likely to know compared to men. Okay. But again, I have some good news in all of this. So I want to pause here and just read this quote from Abigail Johnson. So who is Abigail Johnson? Well, she is the chairman of Fidelity Investment. So yes, Fidelity is among those companies that has significant female representation in our C-suite. And in fact, again, here, as you can see, our chairman, Abigail Johnson, is a woman. So here's what she has to say. So women need to know that they can be successful investors, and many of them are. We just need more of them out there. So continuing on that thought, so actually research shows that despite this lack of confidence that women unfortunately have with respect to investing, that women actually make better investors than men on average. So if we looked at an analysis, and this is an internal study. This is coming from our US partner. So we looked at 8 million of our US accounts, and we found that women tend to have a higher rate of return compared to their male counterparts. Now, when asked, only 9%, so less than a tenth of women surveyed thought they would actually be doing better from an investment perspective than men. So a lot of these, these concerns that, or this lack of confidence that women have, like we can see empirically in the data, and this is just one, there's another study that it's a little bit older and outdated, but it shows the same result, that women tend to be better investors than men. And that is partly because of some of the slides that we just went over, right? So women tend to value that collaboration with a financial advisor, right? Part of that, I think I would argue as well, is women tend to not check their statements as much as men, right? So they want to, they trust, or they want to have that partnership, and that in at the end of the day tends to be beneficial. So now I think it's worth pausing here to talk about what are the barriers that women face in terms of getting financial advice or being more active and engaging with advisors to get that financial advice. So the most common things that we hear are, I don't have enough money to start out. Financial literacy, like I don't know enough as well. Or why should I work with an advisor? What's the value, right? So I want to unpack a little bit of this just by, let's start with, I don't have enough. So here is an example that showcasing the power of compounding, right? So I'll walk you through this slide. So basically we're comparing two investors, Jaime, myself, and then Taylor. Okay, so Jaime is the light blue line here, and Jaime contributed 10 years. She was invested for a total of 20 years. The total amount that she contributed during that initial 10-year period was $50,000. And at the end of the 20 years, she had $168,000. Now, let's compare that to Taylor. So Taylor contributed for 10 years, so the same amount of contribution time. However, Taylor started contributing 10 years later. So basically when Jaime stopped contributing, Taylor started contributing. So Taylor also contributed for 10 years. She was invested for 10 years. The total amount that she invested was $100,000. So double that of Jaime. But you can see at the end of this 20-year period, Taylor had $156,000. So what is the key takeaway here is that the sooner that you start the investing, the better, because that power, that magic of compounding is truly, truly powerful, right? So it's never, you never have too little. It's always a good idea to start early. It can make a big difference over time. Okay, the next barrier to women accessing advice is financial literacy. So we have a lot of resources on financial literacy, But I want to take you through just an example of some of the resources that we have, and also just let's just break down some barriers right here, right? So you often hear us talk in the finance industry about asset classes. What does that mean, right? What's an asset class? So there's three major ones that you should know about. So the first, pretty obvious, it's cash, right? It's safety. You don't have to worry. I mean, there's, currency differential between CAD and USD and CAD and the euro, et cetera. But it's a very liquid, very safe asset class. Next, we have bonds, right? So bonds is basically an IOU to the company. It's where you're lending a company money, and in exchange, that company pays you what we call a coupon. So they pay you income. At the end of that term, they give you your full principal back, right? So that's a bond. So it's also considered a fairly safe investment. Still subject to price movement up and down, right? But again, seen as a way to generate income and more on the safer side. Equities, it's what we also call stocks, right? So it's where you have a share of a company, so you have a part ownership in the company. Now, this has a higher level of risk. Doesn't necessarily mean that it's very, very risky, because of course all companies are quite different, right? But this can potentially generate a higher rate of return than a bond and a cash, and bond and cash, and has historically done so, right? But this is not an either or scenario. Having technical difficulties with my mouse here, so let's see if I can. Okay, there we go. Okay, so it's not an either or scenario. You don't have to own just cash or just bonds or just equities, but you can own all of these in conjunction with one another to build what we call a balanced portfolio, right? So that's what working with a financial advisor, they can help guide you in terms of what's the right mix for you that will help you achieve your goals. So again, one of the barriers is why work with a financial advisor. And I mean, the evidence is right here. So people tend to feel better and more prepared from a financial, emotional, physical, and social level when they are working with an advisor and with a plan. So all of this, again, is crucial to feeling prepared and for your financial and emotional well-being. So some of the ways in which an advisor can help you. So this is looking at the value stack. So there's different levels to helping you, feel ultimately fulfilled, right? So the base level is talking about that money management, right? So it's taxes. How do you manage debt? How do you manage cash flow, insurance, right? Like that's baseline. That leads us to achieving our goals, right? College, retirement, estate planning, or maybe you have a charity that's near and dear to your heart, right? So you start taking care of that, and that gives you peace of mind. You're able to focus on things like that really matter, like your loved ones, your family. You have more time on your hands. You don't have to worry as much. And that ultimately leads you to feeling accomplished and to feeling fulfilled and leaving that legacy again for your loved ones as well. So working with an advisor can be crucial for this overall well-being. And more on financial literacy here. So more to why it works well to work with an advisor is that it really does pay to be invested and to stay invested and to, again, trust that advice that you're getting, right? So what are we looking at here? Well, we're comparing two investors who invested in the Canadian stock market, and we're comparing an investor who tried to time the market, which is the dark blue line. So what they often did was they sold at the low, or they invested 100% into bonds, or comparing that to an investor who just stayed the course in a balanced portfolio, right? So over the fullness of time, you can see that who was rewarded more. Both investors made money, I should note, but it was the one who trusted the process, trusted their advisor. That's who ended up ahead at the end of the day. And going back to how women think differently than men, women are more likely to stay invested through periods of volatility than men. And again, I think that part of that comes back to not having those emotional reactions and trusting the plan. So those are some slides that we just went over on financial literacy. But I would say don't stop here, right? There's lots of great resources that both your advisor can provide. And Fidelity has resources as well. We have webcasts, we have articles. All of this can be found on our website. So this is a plug here for that. All right, so before we end the presentation today, I just want to leave you with 5 things you can do to start feeling better right away and taking control of your finances. So, number 1, you can take an inventory of your net worth. Part of that, of course, involves speaking to a financial advisor who will help you develop a written financial plan. You can also make a goals list, right? So what are your short-term goals, your medium-term goals, your long-term goals? That can help you evaluate what ultimately your savings goals are, and having, different buckets to achieve those, different investment plans to achieve those different goals. Again, talk to your financial advisor. Financial advisors are a resource to help you feel like you're on track, help you feel like you have a plan, and ultimately, help you have that overall sense of financial well-being. And then here's the next one. So make investing a habit, right? So we just shared some, I just shared some slides on financial literacy. There's more on our website. You can find more if you talk to Jackie as well. But making it a habit and investing regularly on a monthly basis. There's no amount too small, right? So if it's $25 a month, if that's all you can do, great. If it's more than that, also great, right? But the sooner that you get started and make it a habit, the better overall you're going to feel. Okay, so that brings me to the end of today's presentation. I hope you got something out of it. I hope you learned a little bit about how, again, women are empowering themselves, women are earning more money, the different ways in which men and women think about financial well-being, and then lastly, saving and investing, again, how women and men approach it differently, and also how women can be truly successful investors, and the data shows that we are better investors oftentimes than men. So thank you so much for joining us today. I'll keep online here because we might have a couple questions, but I'll tune in to Jackie.
Thank you so much, Jaime. As always, great information. And with the timely conversation, I thought maybe you could give us just a little brief summary overview. Question of the day is, what is the political noise that's going on? Due to the markets. Pretty much every conversation I have these days is wanting to chat about that. So maybe you could, since we have you online here, could just share your expert opinion.
Yeah, sure. Thank you. So yes, that is the topic, I would not just say of the day, of the week, but it is the topic of the year, and it's likely to continue, right? So there's a lot of, obviously, uncertainty around tariffs, around Trump, and quite frankly, what the market doesn't like is uncertainty, right? Uncertainty causes markets to go up and down because markets are ultimately a mechanism to price stocks, right? And so markets can't figure out when trade policy is so uncertain, it's very difficult for markets to price in what is the impact to company earnings, right? And so that's why you're seeing this up and down in the market, because the market does not like that kind of uncertainty. Unfortunately, that uncertainty is likely not to go away. The Trump tariff, that narrative is likely going to continue to be volatile, right? So you can continue to expect market volatility, some of that chop in the markets. Now, that is not to say that we all need to go, pull all of our money out of the market and go run and hide. Again, like the slides that we actually just looked at, we're showing it actually pays to stay invested through this turbulence, because as much as we don't know what the negative days, like today's a negative day so far in the market, but yesterday was a positive day, right? So, and the market is up more than it's down. So despite a lot of this uncertainty, I can tell you that what actually really matters to the market over the fullness of time, so looking beyond the short term, the trade policy, which could, change on a moment's notice. What's important right now is to look beyond that, those short-term unknowables, and to peel it back to what really matters to markets, which ultimately, again, over the fullness of time, is corporate earnings and fundamentals, right? That's what the market trades on. And while we have that short-term uncertainty, we can do a lot of, as we're active managers, we can do a lot of heavy lifting in the meantime and find signal through the noise. And that is estimating what is the impact to corporate earnings over the fullness of time. And what I can tell you is that Fidelity's analysts and portfolio managers around the world have not had a weekend since Trump took office, right? And it sucks for them, but it's peace of mind for us as investors, because they are doing the heavy lifting right now for us. And by that, I mean, they're talking to companies on the daily, right? They are talking to policymakers. We have a political study research team in Washington that speaks with the lobbyists and is very familiar with the scene in Washington. So we have this massive research network that's working for you, that is working diligently and around the clock to make decisions for our investors that can either step out of the way or divest of companies that are going to be adversely impacted by earnings. That's one. And two, we can invest in companies that have been indiscriminately sold off, right? That there's been that knee-jerk reaction and someone has sold that company, and we can step in and say, no, we've done our homework. We know that that is actually an opportunity, right? Again, looking long-term. So Cole's notes is that, yes, there is uncertainty. Yes, that's going to cause gyrations in the market. But again, over the fullness of time, we know market is up more than it's down, and we can look through some of this noise to, again, find that signal and maybe find opportunities along the way. So I hope that provides some comfort for everyone on the line. But yeah, we'll get through it, everyone.
That's right. Just make a plan, stick to the plan.
Yes, yeah. On that note, I always love to say volatility is part of the plan. So we don't know what's going to cause the volatility, but volatility is always going to happen. And there's always a headline that's going to cause volatility. This year it's tariffs. A few years ago it was inflation. Back in 2001 it was the terrorist attacks, right? There's always a scary headline that's going to scare you out of the market.
Yeah, there's always something.
Yeah.
Perfect. Well, thanks again for your time. Have a wonderful International Women's Day, and to everybody who joined us today, thank you for joining us, and we will look forward to doing another presentation here in the near future.
Thanks, everyone. Bye-bye.
Okay. Bye.